Good afternoon. My name is Craig Sullivan. I'm the principal at CLIC-Media and the moderator of today's investment panel at the Commercial Real Estate Lending Conference Summit. Sadly, we had a little bit of a technical issue during our introduction, so you missed mine. You also missed Ben Maggard of Chicago Title. He's a commercial rep working national accounts from coast to coast, and Logan Rodrigues from Keypoint, a credit union that is also making commercial real estate loans. We had an outstanding panel today. I know you're going to enjoy it, and thank you for joining us.
We're looking at the borrower's ability to pay, so he's got to demonstrate that he can make the monthly payments on that, are our two main factors. And then third, our exit strategy. How are we going to get paid out? Most loans that we underwrite are 12 to 24 months.
Great. Brock, thank you very much. Ben?
Thanks, Craig. Ben Maggard, Chicago Title, based out of California, but I handle title and escrow nationwide, every state across the country, including Hawaii and Alaska. I handle every property type, every type of transaction, whether it's a refinance, construction loan, any type of property, every state, one-stop shop. I'll share my contact info in the group chat and look forward to talking in this group. Thanks, Craig.
Thank you, Ben. Logan.
Hey, how's it going? My name is Logan Rodrigues. I work for Keypoint Credit Union. We're based in California, but similar to Ben, we lend nationwide to all the 50 states. I think right now we have loans in about 40 of them. We specialize in the investment permanent financing. We do purchases, refinances, cash out refinances, and most of our loan terms are between 3 to 10 years. We don't charge prepayment penalties, and we also offer a 30-year amortization, which is nice for a lot of people at the moment. And I'll also put my contact info in the chat too.
Thank you, Logan. Kim Tran, how are you, my friend?
Great. My name is Kim Tran. I'm with the CoStar group. I've been here for about 9 years now. For those of you who are not familiar with CoStar, we're the largest research company in the United States across all industries, but primarily our focus is commercial real estate. You may know of some of the brands we own.
The volume level seems to be low.
LoopNet, 10X, Apartments.com, Apartment Finder, Westside Rentals, Smith Travel Research, a whole bunch of different websites, but essentially we provide data to the industry. Anybody who touches commercial real estate in one form or the other has probably used one of our products. If you are in the industry, it's changed quite a bit over the years to where now if you need to do anything, you got to have some data to back it up, and we provide the data for you to make those decisions. I'll put my information in the chat. If anybody's interested, feel free to reach out to me.
Kim, thanks. You may want to turn up the volume on your microphone as well. John McLean.
Hey. John McLean, Fidelity Mortgage Lenders. We're a private lender. We fund similar to Brock, but we're probably a little more commercial focused. We also do long-term loans, so we'll do 5-year interest only. We do a 30-due in 15. We can do a 20-20. We do some residential. We'll do single family, multifamily, and loan amounts about $100,000 to $15 million. I'm actually quoting a $20 million loan, but that's kind of few and far between. All our loans are non-recourse. There no prepayment penalties. So it's kind of just the points and the rates.
Does anybody need to be sent to a room?
I think we're good.
I think we're good, Arnie. Thank you.
And we've got about a little over a $300 million portfolio. We do lots of transactions, and we're really busy right now. Most of the transactions we get are brought in from brokers, so we can pay rebates or add in on the points and cover it that side, or the brokers can just charge separately. So yep, a lot of different transactions and pretty good market right now for us.
Thank you, John. Tom Curtis.
Yeah, thanks, Craig. My name's Tom Curtis. I'm a real estate appraiser with Curtis Rosenthal. We do all commercial, or we say income producing properties. retail, office, industrial, vacant land, apartments, what have you. Do them for all different reasons, lending, litigation, estate planning. We get involved in rent resets a lot. So there's just all different kinds of reasons we do these appraisals, and I've been doing this for probably over 35 years.
Perfect. Thank you, everybody. I do want to make mention, we got a couple of old friends in the audience. Holden Lim, good to see you. Always a pleasure, my friend. And we have the one and only David Bowman, hotel broker extraordinaire, joining us as well. Thank you, guys. Appreciate you being here. Brock, I really want to hear about your fix and flips. So I've got a broken motel that I want to bring back to life and make it a motique, like the Phoenix rising from the ashes. How can you help me with that?
So Craig, I'm not going to be able to help you on that one. Our fix and flip product is primarily for residential and multifamily. So our client base is acquiring a single family or multifamily property, renovating it, and then going to sell it for a profit, hopefully, or refinance it and hold it for a long-term rental. We're seeing a lot more loans though with these kind of accessory dwelling units we call ADUs. So they're taking an existing house and building a number of units in the backyard. Very popular here in San Diego and Southern California, and have had a lot of success on financing. I always call it kind of a quasi construction loan / fix and flip loan.
Well, let's move into your construction loans. What food groups are you liking to make?
So again, primarily residential and multifamily on the new construction. We like to see them permit ready. Borrower is either a general contractor or has a past experience building houses. Pretty aggressive on the financing options. We'll end up to 65% of the completion value of that project. Our loans will include 100% of the construction funds and typically include a payment reserve for the construction period of that project.
Perfect. And you're also making bridge loans as well, correct?
We are. We offer a full gambit of private loan, hard money loans. Ours are a little shorter term. Typically 12 to 24 months compared to what John is offering. They offer a pretty long bridge loan product.
What are your interest rates on the bridge loan?
Rates right now, you're going to be in the high 9s, low 10s, but it all depends on loan to value ratios. Again, we like to be around that 70% loan to value. Borrower credit, like to see above 675 or above and show the ability to pay.
Okay. How about a hero story?
All first position loan.
Oh, absolutely.
Mm-hmm.
How about a hero story? How did you save or your bank save a deal for a client?
Yeah, so a hero story for us, we had I'm going to highlight an ADU project. Client had the permits ready. They were going to go with a conventional lender for the ground up construction of the ADU component. Unfortunately, lender decided that it wasn't the right transaction for them. These ADU projects are relatively new. They're hard to value, hard to figure out, what rental income is going to be, what you're going to get on these ADU projects. So they had to go down the private lending route. First time they've ever done this before with their contractor, reached out to us. We structured a very advantageous construction loan for them. In fact, I was actually just on the phone with them yesterday. They just got their certificate of occupancy on the project, and they're going to be refinancing us out with a conventional loan.
Outstanding. Thank you.
Yeah.
Ben, Chicago Title, full disclosure, is my title and escrow company of choice for both my commercial business and for my private real estate as well. They are also a founding exhibitor of the California Logic Investment Conference. So Ben, nationally, I love it. You're going coast to coast, Alaska and Hawaii. So I want to talk to you about Alta surveys and extended coverage Alta owners policies. I think they're a must. I don't care what the liability is. How are you getting through these surveys right now? What's going on there? When are you requiring them? What do you want? Do you have approved vendors for Alta surveys?
Yeah, so approved vendors. We work with every survey company, every engineer. I have a handful that I always recommend, just ones that I work with regularly that are easy to work with, that cover all the bases. We don't always require surveys. If a buyer is requesting standard coverage owner's policy, a survey is not required. If they're requesting extended coverage, a survey is required. However, if they don't provide one, we'll leave in the general survey exceptions within the policy. And it kind of defeats the purpose of extended coverage. I always recommend extended coverage. I mean, you'd rather have more coverage than less. And then obviously high liability transactions, 100 million plus. There's attorneys involved, and they're typically requesting extended coverage. So therefore, we'll require a survey just to remove that standard general survey exceptions. Sorry, getting some feedback from someone there. So, like I said, surveys are not always required, but depending on the survey, or sorry, the coverage requested, and then also endorsements. There's a survey endorsement. There's zoning endorsements. So we do require certain things: a zoning report for zoning, survey for survey endorsements, etc. So obviously every deal is different, as everyone here knows. And so I'm happy to discuss specific transactions, just one-off any time. So feel free to reach out.
Perfect. Hey, Ben, before I cut you loose, I think everybody here knows the title and escrow. If you don't have your microphone muted, would you please? Title and escrow are critical to the transaction, to getting it closed on time and everything. One of the things I like about you and your team is you are a team heavily involved with both the title desk, the escrow desk, and the underwriting. So would you talk about that for a moment, please?
Sorry, repeat that.
If you would kindly mute yourselves, we're getting somebody's feedback. It'd be greatly appreciated. Ben, title and escrow are critical to the transaction getting closed on time. You've got a unique relationship with your title officer, your escrow officer, and your underwriter. Would you talk about that for a moment, please?
Yeah. So, I mean, I always recommend having an advocate like myself on the title and escrow team for your closing transactions. I kind of quarterback any transaction between my title, my escrow, and my underwriters. I have a great personal relationship with all the teams and units that I work with, including my national senior underwriting team, which comes in handy quite often. I can get things done urgently that normally would take a while. So if you have a transaction that needs to close quickly, it's always beneficial to have someone like me in your corner that's able to get things across the finish line. Sometimes, large construction loans, we're going to ask A to Z. We're going to ask for a full cavity search. I like to pride myself in finding workarounds. If, a borrower doesn't want to provide their full financials, I tend to find loopholes and, get the things done properly where we are covered, as well as the borrower and the lender. So it's always beneficial to have someone in your corner that kind of can coordinate through all the title, the escrow, and the underwriting teams to get the deal closed.
Absolutely. Gotta love that relationship business. Thank you, Ben. Logan, I love credit unions. What are you doing for permanent financing?
So right now, like I said, we lend nationwide. We focus on permanent financing, so no bridge loans or construction financing, but we do purchases, cash out refinances, straight refinances, and similar to the other presenter, we kind of focus on 65 to 70% LTV ranges. We basically do all property types, and as long as the property cash flows, we take a look at it. Part of the perks of a credit union, at least for us, we offer the 30-year amortization. I know a lot of places only go up to 25. And we also don't charge prepayment penalties. So a lot of people are into that right now, especially with rates someday, maybe one day going down again. So they really like that aspect.
I love that. Do you have a limit on your cash out refis?
So I would say the limit is our team does like to see some skin in the game, as we call it. So we won't do 100% cash out refi, but it's probably somewhere along the same line, 65 to 70% of what they put in down payment / CapEx wise. Yeah.
Love it. Any special CapEx requirements on any asset classes?
No special CapEx. We just want to see how much you put in and we'll cash you out, depending on the property value up to that 70% level.
Wonderful. Portfolio management. I know that's part of your responsibility. Would you explain to the audience what that is, please?
Sure. So I'm also on the servicing side. So I maintain the portfolio. We have close to $500 million in CRE loans. And basically all that is for us is once a year, we do an annual loan review where we're going to collect updated tax returns, rent roll, leases, whatever any pertinent financials are. We do a quick review. As long as it cash flows, we try and stay out of everyone's hair. But that's kind of what it is. Part of that is also portfolio retention. So I'll reach out, offer some rate modifications sometimes if I see rates dropping to keep you as a customer and various things like that. And we're always looking to try and get more loans with our existing members because we know they perform as agreed.
Absolutely. How about some of the benefits of working with a credit union?
I'd say the biggest one, at least for us, is we are pretty malleable and small. We have a 20-person team, so there's less bureaucracy. We can get things done quicker. You can reach a hold of an actual person and not a call number or someone that's going to transfer you. And the other ones that I already mentioned is the no prepay and the longer amortization period.
Perfect. You got a hero story where you guys saved a deal for a client?
Yeah, I'd say it was similar to another presenter where they had a deal that was in place down the home stretch, but maybe when they were rounding third base going to home, the other lender backed off because of whatever the credit risk was. So we took over and it was kind of a rush deal. There was a deadline in place. And because of our small processing team and underwriting team, we were able to get it done in 30 days for that specific deal. So we are flexible and we can work with people to get things that other larger institutions might not be able to.
Perfect. Thank you, my friend.
Yeah, and I saw someone in the chat. Our sweet spot loan amount is generally between $1 to $5 million. That's kind of the average.
Great. Thank you, Logan. Kim Tran, CoStar, also an exhibitor at the California Lodging Investment Conference and a good friend. I love your comps. They're better than title company comps. And don't take any offense at that, Ben. But CoStar has always had the best comps. And you've got so many services. The people that aren't using your comps service right now, would you go into that a little bit, please?
Yeah, can you hear me okay? I know there was microphone issues earlier.
Better.
So I switched out the audio. Okay, great. Yeah, for those of you who are not familiar with CoStar, we track pretty much everything. A big part of that is tracking transactions, comps, so to speak, on the sales side, whether they are on market, off market, arm's length or not. And our researchers tend to follow up on every transaction, speaking to brokers, owners, developers, anybody who is involved in that transaction to get additional insight on those comps. So if you find out about a hotel that sold in Anaheim and you wanted to know the details about who bought it, how much did they buy it for, what's their financing on the deal, who sold it, and show me all the contact information for all those involved, we'll have that type of information, right? But a lot of people also don't know that we're the largest listing service for commercial real estate as well. So many of you have probably heard of LoopNet, which is our public-facing website to find properties, commercial properties for sale or for lease. But you're only looking at about, I would say on average, 40% of what's actually available on the market, because what you're seeing on there are advertised listings. The rest of the listings are all in the CoStar platform. So LoopNet is essentially a subset of that CoStar data. Right. You can look at the CoStar data as more of like an MLS for commercial real estate, but with comps, with contract information, and then with a whole bunch of analytics for you to make decisions on not only where to invest or what to lend on, but who are all the people involved and strategically what you should be doing or where you should be doing it.
I love it.
I'm not sure if
Yeah. The one thing that I really love about the comps is, brokers will always tell you, well, really can't discuss the deal. It did close, and you can throw a range at them. But you go find the comps, and there's David Bowman's name, and he's contact information. You guys have everything there, okay? I love it. Data and information and bundling up services. Kim, what kind of service can you offer to commercial real estate owners, management companies, brokers, etc.?
Yeah, so the different types of services, they mainly fall into a few main buckets. The first one, of course, is going to be advertising. So if you're a owner of commercial real estate, whether it's office, industrial, retail, or multifamily, and you want to advertise, availability, if you are a multifamily owner, you can advertise on our entire apartments.com platform, which includes Westside Rentals, For Rent, Apartment Finder, something like 27 different websites.
Right.
And you just got to enter it once, and you're going to get the most visibility out of all the different apartment listing websites online anywhere, right? And of course, there's varying levels of exposure that you can pay for. So if you want to show up at the top of the list every time, you can pay for that. Same thing on LoopNet. If you've got, a multi-tenant shopping center or office building, and you want tenants to be able to find your space available for lease, well, you can advertise that on LoopNet. You can pay for the amount of exposure you want and get that leased up. And at the end of the day, it's all about decreasing that vacancy loss and maximizing rents, right? Sometimes it takes money in order to get that done, but if you're not doing it and nobody can find their property, unless they're driving by and they see a big for lease sign and just happen to be in the area, they're not going to find it. But online, they'll find it wherever they're sitting, right? So that's the advertising side. We have another product called 10X, which is actually getting looped together with our LoopNet advertising product, where you can list your properties for auction. So they're basic commercial real estate auctions. The other piece, and the main piece, is going to be our CoStar platform, which I kind of discussed earlier. But basically, you're able to find out any information on any commercial property, listings, comps, analytics. What's folded into that is a full research staff and analytics staff that can basically answer questions or do additional research for you. So think of us as your research team that's available for you, not only with existing data that we provided, but if you need additional insight on who a potential owner of a property is, and you're a CoStar client, our research staff will get on that and look for it for you, right? But this is across all property types. So hotel, hospitality is a big one, industrial, office, multifamily, retail, and any type of insight you want into not only the specific markets, but the sub-markets, or even more granularly, you can run custom analytics set on maybe a 2-mile radius around a specific address that you want to get specific demographics, rent growth, analytics, anything for. You can do that automatically, and we'll show you how to do it.
Perfect. Kim, thank you very much. John MacLean, founding sponsor of the California Lodging Investment Conference. We had a client. He took his pulse, got the deal funded in 72 hours when the initial lender dropped out. So I got nothing but good things to say about you, my friend. Tell us about what's going on with, you've already mentioned your sweet spot on loan amounts. So how about maximum loan to value, and what are you doing about speed to get your loan funded and closed? I gave one example, but I think you can, certainly enlighten more.
Yeah, so I mentioned that we're kind of 100 to 15 million. I would say our average deal size. I mean, we have a little over a $300 million portfolio and over 500 loans. So I guess the average has been around 600,000. Although some of these loans will be, because we do longer term bridge loans, we're not just doing short ones. We'll have loans that are 10, 12 years old on the books too. So our average loan size is probably kind of around $1 million. I would say maybe 900 or something like that in the last couple of years. And yeah, we do a lot of quick deals. It's funny. I was just looking because you're talking about hero stories. I've got a deal that will probably, I would imagine, we'll have docs ready this week, and I would guess we'll fund like Tuesday. And I just looked at the email. I received it Tuesday afternoon. So, just got a question. They actually had a prelim with another lender that's fallen apart. It's just a little, I guess I would say, a retail property up in San Rafael. Borrowers' tax returns weren't working with the bank. They actually hadn't gotten an appraisal for whatever reason. I guess maybe it hadn't gone that far, but the borrower is in a hurry. They wanted to close by month end, but we'll probably, it looks like we'll close probably in about a week from when we got it. And we're not even doing an appraisal. They purchased the building. It's like $1,550,000. We're going to do a $775,000 loan. They purchased it a year ago, and I was able to use CoStar, which I use all of the time, and kind of see what the market price per square foot is in the area. It like kind of works with the purchase price they had last year. So now I have the purchase price as a data point, and I have CoStar as a second data point. So I don't need to, sorry, Tom, but I don't actually need to order an appraisal on this one. But, there's a lot of transactions where someone says, hey, look, I need max cash out or something. We're a low leverage lender. We're equity based. So we're usually more in the 50% range. We'll go 55% on residential in a good location. But there are a lot of transactions that we do that are more outside the box, special purpose things. I'll just mention I kind of put it down for like a hero story was, although we're more of a West Coast lender, mostly we're in California, but we're also funding in Oregon, Washington, Colorado, Texas, Montana, Idaho. So we do transactions kind of all over, but I had a broker call with a guy saying, hey, look, I've got this huge nursing home, 7-story in Oswego, New York, which is like on the east side or the west side of New York. And they have a $500,000 loan on this, 100,000 square foot building. And they, it's probably worth, I don't know, 12 million, 13 million, whatever they were saying. And they're looking for about $4 million, and it's a nonprofit, so it's got to be non-recourse. Is this something you can do? We're not really doing the loans in New York, although we funded a few. And Chuck, our owner, is from New York, so I said, well, I don't know. If they only owe $500,000, yes, we can do a loan. I just don't know how much. We'll have to get an appraisal on it. And so we're doing it, and their financial statements are not that strong. It's, of course, nonprofit. So that's not something we really focus on. We're just looking at the equity in the property. I'm thinking we'll probably do around a $4 million loan. I think it'll appraise maybe 10 or a little over. We'll probably hold that to 40% LTV. It's not a normal, easy transaction that a lot of lenders would even be able to do. But the collateral is good. It's right next to a river. It looks really nice. So that's one we're doing. We do get a lot of churches. Churches, we kind of tend to hold to 35% LTV, which is kind of land value. And all of that sounds really low. We do a lot of these loans because most churches don't have a lot of money against their property. They shouldn't. So we get a lot of transactions where it's free and clear, where they've got $100,000 on it and they need another 100 to do some work at the property. And when you get into like a nonprofit, no one wants to sign to personally guarantee a loan, and all the most of the lenders are going to require personal guarantee. Somebody needs to sign up. So those types of transactions are hard to finance. Those are ones we can do. Again, we just need to have enough equity in the property. So, there's a lot of different transactions that we can do. Rate wise, we're about 10.5 to 11.5. In most cases, we'll be 10.5 if it's kind of a single family or residential property, I should say. Good location, good borrower, good credit, all of that. Probably in the higher 10s, 10.75, 10.875, 10.99 maybe. If we're doing commercial, I think actually the loan in San Rafael, we're at 10.99. She wants a 20-year fixed, 20-year amortization. Not really a standard loan. That would be more of a business banking loan, but the tax returns don't support. So I think I originally quoted the 5-year fixed interest only, but I said, we could do a 32 and 15, or, we could actually do a 2020. Well, she really wanted a 2020. So we put the rate a little bit higher. Every loan we're making, they're trust deeds. We're selling them to the investors. An investor, like if one of you guys said, hey, I'm good with putting a couple $100,000 or $300,000 into one of these trust deeds. If I look at this transaction at 10.99 to the investor or to the borrower, and that'll be a 9.49 investor rate, no prepay, but they wanted the 20-year fixed, and this person will probably have the loan for, I would imagine, several years. Otherwise, they would have gone for a shorter term loan or requested the 5-year IO. So these are great investments. On the flip side, I actually just had a house in Newberry Park. Borrower is a Mexican citizen. Let's say we've got 3 loans out to him. He's got 5 or 6 properties. We're doing a $260,000 loan on a 3-bedroom house in Newberry Park. I pulled it up on Redfin. It's got a 800 plus value. We're doing a $260,000 loan. So I called a buddy of mine and said, hey, do you want to fund this one? He just sold his house, moved to Nashville. It's 260, and he's going to get, I think that one we were at 9.8 or 10.875. So 9.375 rate on, 20% LTV, 25% LTV, residential first trustee transaction. It's definitely a no-brainer. So we can do a lot of transactions. It's usually a pretty quick process. If we need to go do higher proceeds or borrower wants 50, 55%, then it sounds like we're going to probably need to get an appraisal. If it's a purchase transaction, we're also okay with seller financing behind us. I used to work at Chase. I was there for 20 years, Chase Washington Mutual. I get referrals from them when they're looking at a transaction. Maybe there's vacancies on an apartment building. The seller's going to carry back, or is offering to carry back $500,000. They can't make it work. We don't have prepayment penalties on our loan. We don't need tax returns, all of that. So we can come in and say, look, we'll fund 50, 55%. Maybe the seller carries back, whatever they're carrying back. We're in first position. We can fund the loan, and then maybe in a year, 6 months, a year, 2 years later, we'll do a 5-year interest-only loan. So it doesn't matter. Chase can come back and take us out when the property's cash flowing, the occupancy's there. So we do get a lot of those types of transactions. They come over from banks if we're not getting them, from the borrowers or from direct lenders.
There we go. This is why I love talking to John. He knows all the questions I'm going to ask before I even get there. So, John, thank you very much.
Sure.
Last but not least, Tom Curtis. Appraisals. You make us or break us. You've got a stellar reputation. Your entire team does. Yeah. You've been on one other panel with me, I think it was last year.
That's true. Thank you.
And, you guys have got your fingers on everything. So I'm going to ask you the same thing several times. What's going on with retail space?
Well, first of all, I wanted to give a shout out to Kim and CoStar, which we use extensively. They're probably finding sales data, listings of properties, as well as rental data and listings of rental data. We use that quite a bit. I use the analytics search as well. And that's where I came up with some of the information today. In regards to the Los Angeles retail market, the overall vacancy rate today shows at 5.8%. We've had negative, actually just about zero rent growth and negative net absorption during the past year. I see the forecast is for continued negative space demands. It expects market conditions to stay softer in the coming quarters with little improvement in occupancy and rental rates. Not looking real good.
No, not at all. And tariffs and holiday seasons and lack of ordering and a few other things. I think it's getting close to a perfect storm if it is not already.
Yeah.
Basically the same question on office space. Now, I know that both San Francisco and Austin are at a 27% vacancy rate. And that's scary. Now, Austin was on fire, but it's like, everybody is pulling out. You've had Google and Meta and various others, and you've got, the tallest building in Texas is going to be in Austin, and it's not completed yet. I'm glad I'm not involved with that project. So what's going on with offices?
Well, office has changed quite a bit, as we know, since the pandemic and the demand for office, people working from home and such. In Los Angeles, the overall office market vacancy rate is 16%. Again, negative, no rent growth and negative absorption during the past year. The current fundamentals are the worst position in decades.
Wow.
Vacancy is anticipated to hover around the record highs for at least the next several years, with a continued sense of uncertainty and on the trajectory of overall pricing. Office is really tough to appraise these days.
Tom, let me ask you something. We've got funds coming out of New York that have, had success with getting tax credits and taking what was a Class A office building and converting them to residential. They've got $1 billion that they're going to be spending in various cities and urban centers. Are you anticipating a lot of adaptive reuse with some of these buildings?
I think there is perhaps some of that. It's expensive to do that.
Not very.
I know that the office that we are located in near LAX on Century and Airport, it showed up in CoStar as a story. It had been for sale, and a potential buyer was considering converting basically a Class A office building to storage. It just shows you how bad the office market is. I think it eventually sold to a partial owner user who took the top floor and is continuing leased out the remainder of the building. So that's how it ended up going down. But it was funny to see that as a story in CoStar.
Absolutely. How about industrial? Is that still a darling, or is that starting to slide?
Industrial has been starting to slide in the recent past. I think I show vacancy rate now at 6.3%. Rent growth has been negative, about 5% the past year, which is nearly 20% off the peak in 2023. However, it's about 25% higher than it was 5 years ago. Net absorption has been negative. The forecast shows landlords offering increased concessions, noting that higher tariffs could eventually spur more domestic manufacturing, but more immediately impact the trade of goods imported to the LA ports. So it had been a darling during the pandemic, but it went up really high and it's kind of slipped back now.
And it's funny, we've also had the longshoremen out on strike, and I've got, matter of fact, one of Ben's associates, significant other, is a crane operator over in Long Beach. And they sent me a picture.
Mm-hmm.
Not a single crane was moving.
Oh, man. Yeah.
Not good.
Well, I will say, to wrap up on each of these markets, when we do our appraisals, I mean, we look at the wide overall market, but we also drill down to the sub-market and to the property and figure out what's appropriate for, vacancy and rental rate and cap rates and such. But what I was describing was just more of a market-wide stats. So,
Tom, why don't you give us a hero story where one of the clients called you on an appraisal and you were able to help them out and get the deal closed?
One that comes to mind is it was for a ground rent reset, probably 30 years in on a 50-year ground lease, as a retail pad site, part of a larger anchored retail shopping center.
Yeah.
And this was the prime site right on the signalized corner intersection of two arterial streets. The lessee hired an appraiser